Welcome to Thought Leaders Chat with Ochieng Olo. Today my guest is Mr. Martin Mugambi, the CEO of Citibank, Kenya and East Africa. We're going to be talking about banking, and our theme is on innovation, diversification and growth. Yeah. I mean, if you're talking about innovation, one of the first things you're actually going to be talking about is technology. To what extent has technology, transformed Citibank? I know sometimes you call yourself, you say you're not a bank, you're actually a technology company that does banking or financial business.
Thank you, Ochieng, and good to see you again. And it's a great question because the interesting development in financial services today, especially in Kenya, which is almost one of the most innovative markets in Africa insofar as adoption of technology, is the convergence of technology and finance to bring together what we know as fintech, the convergence of financial services and technology. You made reference to the fact that Citi sometimes is referred to as a technology company with a banking license. And I think that's roughly accurate. Why? Today, if you look at Citi Kenya, and we are 49 years old in this market, going to 50 next year, a good portion, and I say this by using the statistics of roughly 98% of our transactions are automated. 98% of our transactions, customer transactions, are done electronically and using digital platforms. This is not something new for Citi. What I would say is that coming out of COVID, the 2 years of the COVID-19 pandemic, we realized that a lot of our customers have adopted digital models, and in so doing are doing a lot more of their transactions digitally and on electronic platforms, e-commerce platforms, and different channels, which has then meant that as we support our customers, we ourselves have increased the volume of transactions we do digitally. Before, this percentage was in the 93, 94. Now we've pushed it up almost to 98%. Yes, we still have some manual touch points that we are working on. These manual touch points obviously tend to be in our back-end processes. But for the most part, the percentage of transactions that we do digitally has gone up. And to me, that demonstrates two things. One, we are traveling the technology journey with our customers. Two, technology is an accelerator to the right strategy to remove friction out of the customer experience. And that's why we embrace technology in how we serve our customers. So yes, we are very much a technology company with a banking license.
Mm-hmm. One of the things that the use of technology gives you is a lot of data. Yeah. And I think the trend right now is that companies, banks are starting to use data to make decisions. To what extent are you using data to make decisions at Citibank?
It's an excellent question. Citibank is going through a global transformation process. And this is at the very top of the organization, at the top of Citigroup itself. And why transform? Citi is aiming to be a much simpler bank, one that is able to be responsive to its customers in a lot of markets. We operate in 96 markets globally. And that by itself makes for a fairly complex global financial institution. So one of the work streams in this global transformation initiative, which is a multi-year effort that the bank is undertaking, is in the area of data transformation. How we use data, how we use customer data, our own data, and where that data sits within the organization so that we can harness it, use it efficiently, and more importantly, to drive insights for our customers. So one of the things I would give you maybe as an example, how we use data here in Kenya. We are a very strong payments bank. We make global payments, we make domestic payments, we make instant payments for our customers here in the market. And one of the things customers always want to know is the status of their payments. Where are these payments? Where in the process are they? Have they completed? Have they gone through as anticipated? So having data around payments is very critical to improving the customer experience in payments. So for instance, how we're using technology to improve that customer experience, we have a customer platform called CIti Payments Insights. And this payment insights tracks payments from the minute you release it from the comfort of your own office through an electronic platform or interface, right up to the point that the beneficiary receives that payment. The customer is able to track that payment. So by using data across that ecosystem, we're able to track payments end to end. And these are also international payments as well, not just domestic payments. So technology itself is not a strategy. Technology is an accelerator to the right strategy. And how we then do that is make sure that our strategy as a bank is reflective of our ambitions, our aspirations to serve our customers. And then when we overlay technology as an enabler, as an accelerator to the right strategy, we then allow for improvement in customer experience.
It is often said that if you can't measure it, then it's not important.
Yes.
I mean, as much as you talk about innovation, let's talk a little about measuring that use of data. There's something called data maturity.
Yes.
And one of the ways of measuring your efficacy in terms of how you use data is something called the data maturity index. Are these things that you do within the organization?
So it's a good metric that you bring up. Data maturity index is one of several metrics that organizations use in just evaluating how efficiently you're using your resources when it comes to data. As I mentioned to you earlier, we collect data from multiple points in the organization. When we're opening customer accounts, when customers are transacting, and when customers are evolving into different products. So we are always utilizing data. Now, data maturity index really as the metric, infers, is really an organization that is utilizing data in quite a mature way and has mature systems in terms of how the organization uses data. So when I look at CIti, we have data that obviously drives a lot of insights. Yeah? This could be credit data, it could be market data, it could be operational data. Utilization of that data is different across different parts of the organization. So I think it is obviously a very large topic to address in a sitting of this nature. But what I'll say is probably one or two themes that you should take away. One, data, as you probably know and has been referenced before, is the new oil. Yeah? If you are not able to measure how you're using your data, if you're not able to identify correctly where data sits within your organization, if you're not able to manipulate and interrogate that data for it to drive insights for your customers and monetize that data, then you're clearly missing out a very big benefit of having data as an organization. So data, by what I've just told you as the new oil, is really how you monetize data and use data for the benefit of your customers within the organization. Two, utilizing data also comes with responsibility. There's a lot to be said right now around data privacy, data security, where data sits on itself. A lot of organizations are now having data sitting within, public or private clouds, depending on the business model that you are driving. So data security, data privacy is paramount now for organizations, and especially in protecting customers in how they allow the organizations to use that data. So for CIti, we have a very evolved data privacy construct where we not only look at privacy and security, but also how we, where that data sits, right? We have data that sits on most cloud platforms, not necessarily physically present in the countries that use our data, but sit in data centers and in cloud architecture away from the utilization of the data in our various 96 countries where we're doing business globally. So data architecture by itself is quite an evolved conversation for us in CIti. But more importantly, how we drive the data we currently own from our customers to drive insights and for customers to monetize our data is an equally important focus for us. So in a rather, I guess, long-winded answer, data maturity index is really a metric to measure the maturity of how we are using customers' data across different elements of our organization. That's what we infer from that metric.
I'm glad you brought up the issue of data security, because a big topic these days is actually on fraud, because the data is available on different platforms, and I mean, there's a lot of talk about fraud because of the use of data innovation and so on. But I want to look at this within the context of the customer experience. How would you say that the experience of a Citibank customer has changed as a result of these innovations that you have? I mean, there's AI, and banks are now actually able to tailor-make products for individual customers. So would you talk a little about the customer experience at Citibank?
So customer experience is really where the rubber meets the road, right? And for CIti, this is a very important topic in both the consumer and the corporate side of the business. As you know, in Kenya, we only run a corporate-focused banking business. We don't have a consumer business here. But nonetheless, the construct of customer experience underlines how we approach our customers and how we serve them every day. Okay, what do I mean by that? So we measure everything. We track volumes of payments. We track transactions that are completed in our digital platforms. We track transactions that for one reason or another are not completed, whether it's for sanction screening or for other reasons that the end-to-end process of the payment may not be complete. And we look at those metrics and through our customer experience forums, try and understand why are we not able to complete that customer proposition of the payment space, right? So one of the things we do, and we do very religiously, is look at volume data. Because at the core, we're a money center bank. We do payments globally. CIti moves roughly $4 trillion a day in terms of payments across our network globally. And these are payments for companies across our network in various parts of the world. With that level of volume, you can obviously appreciate the level of systems that we have and the resilience of those systems. And two, to move payments in such high velocity, you have to have an automated payment platform or payment platforms across different geographies. So what we do very well, one is we look at volumes of our payments. Two, we do look at where we've not had completion of payments for any reason whatsoever. Three, where we've got outliers or we've got insights that we need more information on. We do also offer customers platforms so that they themselves are able to understand if there's a payment that has not been completed through a CIti Payment Insights platform, or look at payments that are outliers and therefore could be potentially fraudulent or non-standard payments through a payment platform called CIti Payment Outlier Detection. Again, a customer is able to tell from their own offices, right, in the comfort of their own offices, such outlier payments. So in improving the payments experience, we also empower the customer to not just call a Citi platform or a Citi customer care center to inquire about a payment, but they themselves are actually able, through these platforms, to understand if their payments have any issues. So if I look at just that area of payments alone and what we're doing around customer experience to improve the payment experience, not only do we give these self-service platforms, but we also track a lot of payment data across our various channels so that we can keep improving and meeting that customer proposition.
And I know you're one of the first banks in the country to actually employ the use of artificial intelligence in monitoring payments and so on.
Yes.
That has helped?
Artificial intelligence is an incredible tool, and when we talk about generative AI or generative artificial intelligence in Citi, this is obviously a very important area. It's an evolving area and an area where we are also moving forward with the right governance and the right discipline, because AI itself also has risks if not managed properly. So a good example of AI in use in a lot of consumer banks today is what I would call a chatbot, in a consumer banking environment, where a customer can engage a chatbot in a typical transaction that does not require human interface. You can engage them electronically or through a voice-managed interface. And chatbots today are a good example of self-service use of AI through an interface that then helps the customer walk through a number of queries or menus to address a query that particular customer has. So yes, AI could also be used in a corporate sense. Citi uses AI, for instance, in some of our platforms that match, say in a finance context, matches open receivables versus open invoices in an automated manner. And using that AI platform, which is a platform that we've co-developed with a fintech by the name of Smart Radius. We have a tool called Citi Smart Match, which essentially matches, as I said, open invoices with open receivables in a high velocity business, in a high velocity industry. A very successful platform, again, that goes to one, solving a customer pain point around reconciliation, and two, using technology, automating it with AI that then helps that automated reconciliation in a manner that improves the client experience. So that, again, is an example on the corporate side. And we've employed that tool here in Kenya, Smart Match, to one of our customers. That also reflects some of the things that we're doing, the journey that we're traveling in the AI space to improve the customer experience.
Let's talk about diversification. And looking at the Kenyan market and across the banking sector, you see a lot of diversification. But I want us to talk about it more from a risk management point of view. There will be diversification of products, there is geographical diversification, and the whole idea, obviously, apart from growing revenue, is also to manage, the inherent risks in, of course, the investments that you're making, and it seems to be changing, because you look at some banks, including yourselves, the breadth of what you do, is quite wide. There's bank assurance that quite a number of banks are doing right now, and I've seen banks invest into things that are not their core banking, business, To what extent is Citi diversified, and what is the philosophy behind Citi's diversification in terms of products and even geographically?
Great question. The heart of any financial institution, and a bank for that matter, is risk-taking, right? We take risk and we manage risk, and we serve our customers by ensuring that we are able to manage risks for them in a variety of areas. Credit risk is one element of the risk families. It could be market risk, we have operational risk that we manage, so on and so forth. So in terms of your question specifically, you are making reference pretty much to our portfolio from a credit perspective, which of course we have diversification in terms of the industries where we do lend and put capital to work. We have diversification in terms of the type of customers that we bank. So we have what we call a selected target market criteria for selecting our customers. And that is a criteria that we use across all our markets in defining the customers that we are going to work with as an institution. And once we define those customers, we're then able to set certain parameters, what I would call limits or risk acceptances, with which we then engage those customers. So coming out of two important events in the last 24 months, one being the COVID-19 pandemic. We also had a significant election in Kenya last year in August that also went very well. And then the onset of the Russia-Ukraine crisis, which is still ongoing, was also a significant event in and of itself, right? And those events also, when you look at them, whether in isolation or combined cumulatively for the CIti Kenya business, meant that we had to go through the events without significant losses in our portfolios, credit portfolios. Losses, why? Because COVID-19 occasioned a significant slowdown in the economy, as you know very well. Two, customers also cut back on their spending, on their investments, as the general slowdown also kicked in. As we went into the election cycle, that also has its natural slowdown. And again, you do tend to see customer business and volumes slowing down. So I want to come back to your question and point out two things. One, during COVID, we had a general elevation of non-performing loans in the entire industry, right? The Kenyan banking sector has about 14% of non-performing loans on average today, What we did see as a result of the pandemic was that non-performing loans were elevated as customers struggled to meet obligations, as businesses, SMEs also struggled to run their businesses on the back of the broader slowdown. And what then transpired is that as customers had, non-performing facilities and the NPLs went up across the industry, the banking sector took certain measures to help their customers across the pandemic. What we did see was that CIti's portfolio held relatively stable across the pandemic. Our customers, despite the challenges, despite the dislocations that occurred during that period, also came out of it relatively, in relatively decent health. We didn't have a CIti an escalation or a significant increase in our NPLs, which again comes back to those 2 points I made earlier around our diversification from a customer point of view, a fairly strong target market selection in terms of our customers, and the limits that we assign to different industries and to different risks was also fairly well managed throughout the process. So a lot of good learnings from that cycle that we went through, because that was a credit cycle in and of itself. We've realized and we understood and learned that we have a fairly resilient credit model, credit selection and credit management model. Two, we also have a fairly strong customer selection construct that allowed us to have a very strong set of customers who came through the pandemic in a fairly strong manner, which reflected itself on the strength of our own credit portfolio at the end of the day. So that's really where I would want to share that experience with you.
Yeah, Now, ultimately, all this innovation, the diversification and so on, the objective is to grow, grow the business. So I want to talk a little about the growth of Citibank business,
Yes.
And I want us to compare, probably starting from the COVID year and last year and this year, so far this quarter. In terms of performance, what growth have you seen?
Okay. So, Ochieng, I'll take you back a little bit. You ask about growth, and you, I think, cannot talk growth without numbers. So, we look at 22, 21, and 20. Yeah. 22 growth in Kenya was north of 5 to 5.5% GDP. 21 around 7.6%, and then 20 a slight reduction of 0.3. Yeah. So you can see the height of COVID,
Yes.
and then the growth started coming out. So Kenya as a country went through COVID in a very strong manner. Yeah. Not only were fatalities managed, and there were less than, I think, even if we look at 6,000 as the figure, they were in the 5,000 to 6,000 range. And any fatality is not positive, but relative to the global fatalities of 7 million globally in terms of COVID losses, Africa, Sub-Saharan Africa, and Kenya for that matter, did very well. 5,000 fatalities. Economically, the growth in 2021, 2022, as the country came out of COVID, was actually quite exemplary at 7.5 and 5.5 in 2022. Similarly, we saw our business grow significantly. Citi today versus last year, and the vast year-on-year growth for our published first quarter numbers, we grew roughly 10%. Yeah, and on the back of a 5% GDP growth, yeah, same period, we're growing 2 times GDP. So that means that we are not only relevant to our customers, but I see banking as, we are facilitators of capital, yeah, and growing at 2 times GDP growth is really where we should be aspiring as a business, to put capital into the economies to support our customers. And coming out of that COVID environment, those numbers are important. Why? They demonstrate resilience, one, of not only our customers, but our own model, our own banking model. 2, it also demonstrates resilience of our own economy as a country, the diversification of our own country in terms of industries that have grown during this period. If I give you comparative, growth figures from either the EM or the developed economies, then obviously you would see that Sub-Saharan Africa and Kenya, for that matter, did exemplary from a growth perspective. So to answer your question, our business has continued to have a relatively strong and steady growth year on year on the published first quarter numbers. As I've told you, those were 10% year on year, and we're still seeing that trend in the second quarter as of June 2023. We have not yet published our numbers for June, but we're still seeing a fairly good performance from our portfolio and from our business year on year.
Now, in terms of projections, do you see this growth of 10% continuing into the year?
It is a very challenging environment that we're in. Ochieng, if you look at some of the macro headwinds that businesses are going through right now, if we look at the international environment, where again you still have an ongoing conflict in Europe, we also may experience another shock in the second half of the year. We have had interest rate increases in the US by almost 500 basis points to tame what has been a fairly strong inflationary environment, not just in the US, in Europe, in the UK, but other parts of the globe. The international environment, the global environment remains challenging, right? And growth focus prospects for the global economy remain challenging. Domestically, we've also had our challenges, as you probably know, with an elevated cost of living that really is coming from an inflation in Kenya of 8%. We have had increasing interest rates that will make credit more expensive, slow down demand, slow down potentially growth. And we still have some noise, what I would call some residual noise, in the political cycle. It's nothing really to be overly concerned about. To us, we view that as a normal process for any country that has a functioning democracy. So that residual noise will play out, and it will lead to some sort of conclusion at its own time, right? So we expect the Kenyan economy to grow probably at about 5 to 5.5% in 2023. Again, we are cautious to make sure that we support our customers through this environment. We have got challenges around, the currency has also been under pressure from the broader global economy, the strong US dollar, the increase of interest rates in the US, which has had impacts on emerging markets, frontier market currencies. The Kenya shilling is no exception, right? It has also had that pressure. So to answer your question directly, we are cautiously optimistic that we will grow our business in the second half of the year. We are quite also optimistic that Kenya will have positive 5 to 5.5% GDP growth. There will be some headwinds in the second half, but all else being equal, I think we should come out at the end of the year with a reasonable outcome, both from the economic picture in Kenya and from our business as CIti.
Let's dig a little into the geopolitics and the macroeconomic environment in Kenya.
Yes.
And I remember when we last spoke before the election last year, you're obviously quite optimistic that we were going to sail through the election peacefully. And you're right. I mean, that's exactly what happened. And well, the political turbulence isn't over. The talk right now is about the high cost of living, and there are demonstrations right around that. In fact, one is happening, I think, tomorrow. Yeah. Now, to what extent do you really see these issues affecting growth? Because I mean, the government. I mean, our economic policy under the new government is quite radical. Yeah. In terms of what has been proposed in the finance bill and so on. Taxes have gone up on a number of things, and there are a lot of things, carrying expenditure and so on that the government needs to do. Are you happy with what you are seeing in terms of the direction of this economy going forward, say in the medium term?
Yeah. So I will answer this question in two ways. One, as a corporate citizen that has been here for 49 years, celebrating 50, and will be here for the next 50 years. And secondly, as a Kenyan, right? And as a Kenyan, because I have a view as a Kenyan. CIti is a corporate entity that has seen many economic cycles. Economic cycles come and go, right? And we are here as a long-term player. And Kenya has very attractive growth prospects ahead of it, in spite of the challenges that we are going through, right? We have elevated cost of living. Why? Because inflation is high, 8%, right? Today, that's where Kenya's inflation is, primarily because of high food and high energy prices. And those are component parts of the inflation basket. Today, we've had a currency that has weakened because of, as I said to you, increase in interest rates globally, particularly the US dollar, the US interest rates, which has had an impact in terms of the relative strength of the dollar versus emerging market currencies and frontier market currencies. And then three, we have, a finance act that is currently going through what I'd call a legislative process that has now moved to a process of challenge in the courts. And it is important for us to first appreciate that in any democratic society, the fact that we've got different arms functioning as they are is a positive. The fact that we have an act that is being subjected to challenge in the right forums is positive. The right to picket, the right to demonstrate in any democracy that is a constitutional democracy is important. So what is happening with the protests is not unusual. And we are not the only country that is having protests around the high cost of living. I can name a number of countries in the developed West, or the global North as it's called, and in our part of the world. So it is important not to take an overly critical view of these challenges. They will come and go. When you and I spoke and the election was ahead of us, there were all sorts of naysayers who were saying Kenya is going to fall off a cliff.
It's going to burn.
And burn.
Yeah.
The elections came and went. The president was inaugurated a month later. And here we are, right? Sitting here, Kenya has not burned. We're still here.
Yeah.
And the country still, has positive attributes going for it, in addition to the growth prospects I talked about. So yes, elevated cost of living, protests around some of those issues, and that those should be, in a normal constitutional democracy, that should happen. People should be able to express their views, whether it's in a formal challenge like the act is going through the court process, or through pickets and protests that are within the bounds of the law, right? So does that scare us as CIti? No. We have been through multiple economic cycles, and this is another economic cycle that will surely come to pass. Yeah. I think what we can do as an organization is to be balanced in how we approach a number of these challenges, and make sure that we support our customers, our employees, and our stakeholders through it. So yes, the Finance Act is an important piece of legislation that is critical to how the government funds its operations. And it still has to go through the residual or the remainder of this court process. But we will get past it, right? There will be an outcome that has to meet the needs of government and the needs of the taxpayers and the broader population, as I call it, from a Kenyan context. So I don't want to say the glass is half full or we are painting a picture of doom and gloom. No, we have been through many economic cycles. This will come to pass as well. And I'm sure that the outcomes will meet both the needs of the sovereign and the needs of the taxpayers in a manner that makes sense.
Let's talk a little about the geopolitics.
Yes.
The Russia-Ukraine war. I mean, nobody expected it to last this long. I mean, it's a lot of people, thought that it would be a quick win for whichever side, or there will be a resolution of one kind or another. It's still here with us, and the impact has been felt globally.
Yes.
Yeah, and I think even locally, some of the things we've seen is the increase in the cost of not just fuel but oil, cooking oil, and so on. Yeah, how do you see this panning out going forward? Are we at a stalemate where things might be like this for a while, or are you optimistic that things might resolve in one way or another?
You ask an interesting question, and it's a question that we all want to know how it plays out, right? Because one of the things that we have been grappling with, and one of the big conversations we've been having with customers is what I call the 3 R's.
Mm-hmm.
Russia rates recession, increasing
Yes.
rates, risk of recession, and what happens with Russia-Ukraine. This is a complicated geopolitical conflict that is still ongoing. The armed conflict element of it is still ongoing, and there are still different schools of thought in terms of how this could play out. Yeah, and right now I would be remiss if I was to say to you that we have a very clear picture of how this actually plays out. But there are schools of thought that I can share with you that are fairly well informed in both cases. And there's a school of thought that talks about a political settlement at some point, yeah, between the two combating parties, Russia and Ukraine, and potentially, other stakeholders who, for one reason or another, either energy insecurity in Europe, believe that a negotiated settlement is the way to go. So that could be one scenario that comes to the table sooner rather than later, to the extent that an energy insecure Europe, a Ukraine that feels that there is no positive traction to continue the ongoing struggle, and a Russian domestic public that gets tired of the war from a domestic point of view, right? So those three factors could force potentially a conversation. That's one school of thought. There is another school of thought that believes that this could be a prolonged conflict, that it continues to go on the basis that the one side of or both parties do not feel that a compromise is possible, yeah, or palatable, and then it becomes a prolonged conflict that goes on for a period of time. Mm-hmm. Which school of thought will prevail? If I knew
nobody knows,
I would be doing something else.
Yeah.
But to be honest, we can only hope that resolution is in the near term, because the longer the conflict goes on, the more impact it has globally and on other stakeholders and on the actual countries themselves, right? Particularly Ukraine, and the amount of damage and loss that has actually gone into this conflict from just a human loss of life. Yeah. So that's where I would sort of give you my perspective. It's not clear how this plays out, but I think the hope is that resolution takes some form of reasonable shape sooner rather than later, right? The prolonged conflict doesn't really help anyone, in my view.
Yeah, I have two more questions to ask, but let me start with the simmering tussle between the US and China. There's a lot going on on that front, and I think recently the Secretary of State was in China, and yes, and I think the impact of that on the global economy, yeah, could be huge, yeah. How do you view this? Do you see this as something that is worth watching? Is it something bothering you at Citibank in terms of what it might do to the global economy?
This, to answer your question, is, these are the two biggest global economies, right? So there will be natural rivalry between them, whether it's in the technology space, in geopolitical influence in Africa, or in other parts of the world. And this competition between the two, what I would call anchor global economies, will continue. This is just how things are. And for me, when you say would it bother us, it is only in the event that there is potential conflict, or economic sanctions that start or emanate from one side or the other, that then has global impact and global spillover. But today, geopolitical positioning, competition for influence, geopolitical, what I'd call posturing through economic policies in different parts of the world, and an African, context is a good way to gauge. Spheres of influence will continue to shift. Yeah. So no, it's not a concern for us. We operate globally. We operate within the context of these two anchor economies. We have a large business in China, and of course, we have a global business in the rest of the world, anchored out of our head office in the US. So no, it's not a cost. It's not a reason for concern. We view it as natural rivalry that will be there from the two global largest economies. Yeah. So that's really how we approach this, at least from where I sit.
Let's talk about the push by a number of countries, I think in Africa, and also the so-called BRICS, in reducing the influence of the dollar as a global currency. Is this something that is good, say, for us in Africa or the developing world, and for the rest of the global economy?
It's a good question, but there's nothing new here, right? The dollar has always been a global currency, a global reserve currency, and a global currency of trade for a very long time. If you recall, there have been conversations around, a digital currency being a medium of trade, whether that's Bitcoin or another cryptocurrency. The BRICS are introducing or are desirous of introducing a global alternative anchored on gold, so a return of the gold standard. Today, we are seeing trade being settled in different currencies across, say, Indian rupee, Chinese yuan, or renminbi, etc. And countries are doing bilateral arrangements, where they are opting to also use different means of settling trade. For us, we see this as an evolving area. It's providing optionality, right? So today, if you trade in dollars or euros, or you choose to trade in the Chinese renminbi or yuan, again, these are options that are developing. And in the fullness of time, yes, you will see other options to the dollar. But to me, nothing is new. This is all stuff that's been around for a while. And it's still a journey. Today, the dollar is quite established as a means of trade. Is there going to be some option around digital currencies, whether it's through CBDCs, central bank, backed digital currencies, or cryptocurrencies, or other, EM alternatives like we're starting to see from the BRICS? This will develop over time. Nothing new, nothing to lose sleep about.
I know you've spoken quite broadly on many issues, but I'll give you the opportunity to pick up on any issue that you think we may not have covered, which of course is relevant to our discussion.
Yeah. I think what I want to close with is that we are going through interesting times. Domestically, as Kenyans, we can speak about many things. We can talk about, the challenges that we're going through, but it's also important not to lose sight of the opportunities that we have, right? We have also what I would call a fairly dynamic global environment, whether it's interest rates, it's currencies, it's geopolitical conflict. And this element of a polycrisis, is with us. Multiple crises that are happening at the same time, but we are still able to navigate them with some measure of confidence. Two messages. One, don't overstress about everything. We're going to have multiple crises as businesses. So start from the perspective of how we'll be navigating 2-3 crises every year as a starting point. Yeah, because if you start from 0 crisis, then you're not in the right space. As a business person, start with 3-4 crises as your baseline, and then say, how do I navigate the rest of the year? 2, let's not also lose sight of the opportunities. Yeah, the opportunities that we have, whether it's us here in our domestic environment, irrespective of these crises that have the ability to consume us. We should also appreciate some of the positive things that are happening. Yeah? And for my Kenyans and Kenyan brothers and sisters specifically, right? Even after this finance bill, even after these protests for space, democratic space, even after these challenges, we will still have a country to look after, right? So the message here is that we are all stakeholders. We all have a responsibility to Kenya, whether it's at a corporate level, at an individual level, to make sure that we come out of this cycle properly. This is an economic cycle, it's a political cycle that we're going to go through. And for sure, we will come out of it. Now, it may be 6 months down the road, or 9 months, but we will come out of it. Yeah. So for us, we're quite steady CIti in terms of how we're approaching this environment and the current challenges, be they global, be they domestic. We will be around to serve our customers. We'll be around for the next cycle and the next cycle and the next one. So I want to leave you with a thought that these are obviously very challenging times, but the glass is half full. We don't completely, believe that it's very dark, it's very gloomy. Yeah, it's darkest before dawn. Yeah, I think we'll come out of this in due course, and there's hope to just stay the course, do what we're doing, and do it right.
Thank you. This has been Thought Leaders Chat with Ochieng Olo. Today, my guest was Mr. Martin Mugambi, the CEO of Citibank Kenya and East Africa. Our chat today was about innovation, diversification, and growth in the banking sector, not just locally, but globally. As you know, Thought Leaders Chat with Ochieng Olo comes to you every week, and we talk to business leaders across the spectrum in banking, in insurance, in the capital markets, and also in different sectors of the economy. See you next time.